Good morning, everyone. It is Thursday, September 18th. It's I, Curly K here, and I am about to get right into the free trade idea of the day. Now, as you can see on my screen, I do have Adobe pulled up. I have been watching Adobe for quite some time because Adobe has been accumulating down in this particular range here, and it looks like it's finally trying to break out. So, in the long run, I am extremely bullish on Adobe because it's also coming from a little bit of a demand zone, as you can see here. So we've already had that response from that demand zone. And so I think that this is possibly the start of a bullish run. Okay. And obviously, I want this with quite a bit of time on it, but there will be opportunities to day trade it as well. So without further ado, let's go ahead and hop right into it. So on the daily time frame, we did have an aggressive bullish candle. And so it looks like we have a little bit of a resistance about right here where that swing sits. So we have resistance on the day right there. But now let's just look and see what opportunities we do have to trade Adobe. So I'm going to go from the 4 hour first just to find out what the day trade potential is for it. And then I'll go higher to see if we have anything else. So we have the call entry on the 4 hour, and then let's figure out what our magnitude is. So we're looking at 372.58 to the upside. And let's see here. And then to the downside, let's see what we get. So to the downside, we're looking at 351.24. All right, let's see here. And then let's just clone that. So 351.24. All right, so these are the magnitudes that we're going to be operating in when it comes to a day trade. So if we were to take the trade to the upside, if it were to blow through that particular resistance with market structure, strength, and momentum, we would be looking at anything in the money to 370. I would not exceed 370 for this Friday's expiration. And then to the downside, let's go ahead and mark out our put entry, make sure we have that there. And let's mark out our target as well. It looks like there's a little bit of a gap, and it is. So we have to close that gap. Perfect. See if there's any magnitudes up. So where that resistance lived, there is one there. All right, so these are areas where you should consider taking profit, but these are all of your price targets. Now, this is going to be day trade. So for the downside, we're looking at anything in the money, but I would not personally exceed. And let me just do one other thing before I give that number. Okay, perfect. I wouldn't exceed 355 to the downside. I wouldn't go any lower than 355 down. So in the money to 355 down, if we do decide to trigger to the downside with strength and momentum or market structure. And then to the upside, again, I'll say that again, I would not exceed 370. So in the money to 370 up or in the money to 355 down, depending on how we trigger. Now, I also want to look for any opportunities to go even further out. So this is going to be day trade here. So let's make a note of that. But let me go up in our time frames and see what we have. So we don't have anything there. And we have more time on that 2 week, and that doesn't work either. And then on the monthly time frame, we do have something. So we are already above our monthly trigger, which is pretty great because it's going to give us more time to actually be in the trade. So we're above that monthly trigger. Now let's figure out what our magnitude is for the higher time frame. Okay. All right, perfect. So now, since we are currently above our monthly trigger, I do want to see that we have some strength and momentum in market structure, or market structure to the upside, I should say. And because we're currently above that, this is what I see. I see that we do have the potential to go all the way to about 420.32, but this is going to be swing trade. So for those of you who are more day traders, this is not for you. This is for the people who are interested in swinging. For a swing trade, we can go all the way up there to 420. So what I would do is I would say, okay, I'm going to give myself a minimum. I want to stress that a minimum. If you can go longer, go longer. I would want to give myself a minimum of 2 full months on expiration. Okay. Um, so 2 full months on expiration, and I would not exceed 420 on a strike price. I'm going to go as close to the money as my pockets will allow. So just because you can go to 420, I would definitely say, hey, if you can do a 400, do a 400 and get a minimum of 2 months on your expiration. Remembering that the further that you are away from the strike price, the more risk you're actually adding to your position, which is the reason why I would say if you can afford to, don't opt for the 420 with 2 months out. Go all the way 2 months out, but go as close to the money as your pockets will allow. That way, you give yourself a lot more time for it to cook, for you to get in the money sooner, and for it to just make you more money, considering that it can go all the way to 420. All right. So, everyone, this is your free trade idea of the day. If you like these videos and you want to see them continuously pouring in, please remember to like, comment, subscribe, share them with a friend or a family member. I hope to see you in baggage claim. Have an amazing day. Bye.